Opendoor stock closed Friday's trade at $4.45 per share, up 18 cents or just over 4%. For a day when the broader market was down, that was a clear sign of resilience. After the close, the stock traded flat in the aftermarket, giving back just a nickel. Now, at first glance, flat aftermarket action doesn't make for flashy headlines. But in the context of the week we've just had, with highs close to $5, sharp pullbacks, and plenty of volatility, this consolidation is a good thing. It shows the stock is finding stability at higher levels. It shows that buyers are willing to step in and support the stock around that $4 level, while the $5 ceiling remains the next battleground. But the real story here isn't just about daily price action. It's about where this company could be heading. And increasingly, the vision that's capturing attention is that Opendoor has the potential to become something much bigger than an iBuyer. It could become the Airbnb of real estate, a platform that redefines how people interact with one of the biggest markets in the world. Let's take a step back and think about what Airbnb did. Before Airbnb, if you were traveling and needed a place to stay, you went to a hotel. That was the standard model. Airbnb came in and flipped the equation. They didn't buy hotels. They didn't own properties. They built a platform where regular people could list their homes or apartments, and travelers could book them. It was asset-light. It was scalable. And it tapped into a side of the market that was underutilized. The result? Airbnb became a global brand and a multi-billion-dollar company that reshaped the hospitality industry. Now, apply that logic to real estate. Traditionally, if you wanted to buy or sell a home, you went through a real estate agent. The process was slow, fragmented, and heavily reliant on commissions. Opendoor came in with the idea of iBuying, making instant cash offers, buying homes directly, and reselling them. That model had appeal, but it was capital-intensive. It required carrying inventory, managing risk, and tying up huge amounts of money in physical assets. In today's environment, with high interest rates and market volatility, that's tough to scale profitably. So what's the alternative? The answer is the same playbook Airbnb used: go asset-light. Instead of being the buyer of homes, Opendoor can become the platform that connects sellers with buyers, investors, and agents. It can monetize the funnel through services, financing, partnerships, and technology, without taking on the balance sheet risk of owning the inventory itself. That's how you scale. That's how you get to margins in the 70 to 80% range instead of grinding it out on thin spreads as an iBuyer. And this isn't just theoretical. Retail investors, the open army, have been pushing for this pivot. The formal submission of ideas to the board included repeated calls to move to an asset-light model. And leadership seems to be listening. Interim CEO Srisha Radhakrishna has talked about Opendoor's AI tools, like Repair Copilot and Risk AI, that can make the platform more efficient. He's also emphasized transparency and alignment, even buying shares himself this week to show confidence. The pieces are starting to fall into place for a company that can reinvent itself from an iBuyer to a marketplace. Think about the power of that. Airbnb and Uber didn't invent hotels or taxis. They built platforms that made those markets more efficient, more transparent, and more accessible. Opendoor has the chance to do the same with real estate. By focusing on the seller side, helping homeowners unlock value quickly and seamlessly, they can capture the most critical part of the transaction. As Eric Jackson has pointed out, without sellers, there is no real estate market. By becoming the go-to platform for sellers, Opendoor could own the front door of the entire transaction process. And that's where the comparison to Airbnb becomes so powerful. Airbnb didn't just create a new option for travelers, it created an entirely new category. It changed consumer behavior. It made it normal to stay in someone else's house instead of a hotel. If Opendoor can normalize the idea that selling your home happens through their platform, quickly and efficiently, they could reshape the real estate industry in the same way. Of course, this won't happen overnight. It requires leadership that can execute. It requires strategic clarity. And it requires patience from investors. But the potential upside is enormous. The US housing market alone is a multi-trillion-dollar space. Capture even a small percentage of that transaction volume, and you're talking about a company that could justify much higher valuations. That's why Eric Jackson's $82 price target, while ambitious, isn't crazy if you think in multi-year terms. Now, let's talk about what makes this moment unique. We've seen a surge in retail interest. The open army is global, passionate, and relentless. They're not just cheering from the sidelines. They're pushing the company to evolve. They're suggesting ideas, like boosting Google ads to improve visibility. They're demanding board alignment, and they're celebrating insider buys like Shrishas. This isn't meme stock hype, it's retail activism shaping strategy. That's what makes this different from 2021 style runs. We also have macro conditions that could provide a tailwind. Interest rate cuts are increasingly expected later this year, possibly as soon as September. Lower rates mean more buyers, more sellers, and more transactions. For a company like Opendoor, that's like fuel for the engine. Combine that with a leaner, asset-light model and AI-driven tools, and you have the recipe for growth that is both scalable and sustainable. And let's not forget the power of narrative. Stocks trade on fundamentals in the long run, but in the short run, they trade on stories. The story of Opendoor as a struggling iBuyer isn't compelling. But the story of Opendoor as the Airbnb of real estate, that's something investors can rally around. It's a vision that connects retail enthusiasm, leadership alignment, and macro tailwinds into one coherent narrative. And narratives move markets. So as we head into this Labor Day weekend, I see Opendoor at a crossroads. The consolidation at $4 to $5 is building a base. The insider buying shows confidence. The retail energy is undeniable. And the vision of becoming the Airbnb of real estate is starting to take shape. That's the story that matters. Not whether the stock was up or down a nickel in the aftermarket, but whether the company is aligning itself for the next phase of growth. If they can pull this off, if they can shift from a capital-intensive iBuyer to an asset-light platform, integrate AI to drive efficiency, and leverage their brand to become the go-to destination for sellers, they could redefine real estate. They could move beyond being a volatile stock and become a category leader. To me, that's the bullish case. That's why I see consolidation as strength, insider buying as conviction, and retail pressure as constructive. This is not the end of the story, it's the beginning of the next chapter. And that chapter could very well be titled, Opendoor, the Airbnb of housing. So my takeaway this weekend is simple: be patient, stay focused, and recognize the bigger picture. The open army is global. The leadership is starting to align. The macro backdrop is improving. And the vision is becoming clearer. If you believe in disruptive business models, if you believe in the power of retail activism, and if you believe in the future of tech-driven real estate, then you can see why this is more than just a volatile stock. It's a movement in the making. Opendoor may not be there yet, but the pieces are falling into place. And when we look back years from now, this period of consolidation, insider buying, and retail activism might be remembered as the foundation of something much bigger. Something as transformative as Airbnb was for hospitality. For now, enjoy the long weekend, reflect on the progress, and get ready for the next leg of the journey. Because Opendoor's path to becoming the Airbnb of real estate may just be getting started.